Yo, what's going on? Today we are actually back with part 5. Okay. Big thing I wanted to touch on um from part 4, okay? I really want you guys to get really comfortable with what we talked about. Time frame selection. Okay. The main idea of our last lecture, right? We talked a lot about finding your personality style. And a big thing with why that's important, as you're going through your content or, you know, some of the concepts we've already talked about, you have to decide for yourself what you're most comfortable with. You feel me? Somebody who might be on a weekly time frame or a daily time frame might perceive the chart differently than somebody who perceives it on a 1 hour chart. Okay? But the big thing I want you to understand, right? This is why I don't want you to be scared of a certain time frame. It doesn't really make sense to be scared. Everything that we do, right, is fractal. What that means, everything that you see on a weekly chart in terms of phenomenon, right? Let's say fair value gaps or order blocks or, liquidity grabs, things like that. These are happening on all time frames, okay? And our job, again, is to just understand how we can keep this to our advantage, okay? A lot of people ask me like, yo, how are you so comfortable on the 1 minute chart? And my thing is, again, it just depends on my objective, okay? And that's always my answer every time. And so what I mean by that is if I'm looking at a 1 hour chart or a 4 hour chart or down, right? My whole goal is to catch a good move, obviously, but I'm really only looking for certain time frame to make a certain structure, you know what I mean? So when I get in the chart, right, let's say, for example, I'm actually not going to do that right now. Let's say I'm on the weekly, right? And a lot of times I'm looking at some of my favorite moves are just the easier ones. You really don't even have to add too many confluences or whatever for you to have a successful trade. And this is what's so cool about it, okay? Let's say, for example, again, I really like this fair value gap here. I've talked about this fair value gap a few times, okay? And again, we're looking at gold on a weekly time frame. I want us to look at this again, okay? Now, for those who, again, you're not trying to play this for multiple weeks, you're not comfortable leaving in an open position for literally 10 years, right? This is forever. I mean, you can count how many candles there are, but the most important thing to realize here is, right, when you're looking at a certain time frame, you're going to find certain structure. And you're going to say to yourself, okay, I'm normally a day trader or I love scalping, right? So if I want to go to a lower time frame and I want to really make sense of a really insane move, I can go in and refine whatever I'm looking for, okay? Let's say this daily fair value gap is in here, right? And we talked a lot about how fair value gaps, and this, if this is a weekly fair value gap, I'm actually going to what? Annotate that. Weekly fair value gap. This is important, right? Why we like these so much is when I go to point it out and I'll look at the structure on another time frame, it's going to give me another narrative, or I could try to, obviously you see how this is a really big space from point A to point B. So of course, even if you're trying to trade the structure and you try to get a bullish reaction from this fair value gap, right? Let's say you watched it form, you're watching it run up. And I will say this, okay? When price is hovering around this area or, you know, trying to consolidate or having some weird price action, or you might kind of think it's weird before that, and you're looking for this to come down and rebalance, be patient. Be patient, okay? You're going to see, especially if it's a relevant fair value gap and your plan is to try to catch a nice rebalance to try to get your entry. And I will say this to a lot of people who are listening, right? I do not enter the marketplace without a fair value gap. I don't. Or at least there's some fair value gap or some imbalance somewhere within the plan. You feel me? Because, like, if I'm not using it, a fair value gap, I'm playing Mission Impossible. What kind of shit is that? Like, no. I like having fun. You feel me? So, I'm in a super position to where, okay, maybe my weekly is too big for me. Let's do it like this, right? Let's take another color. And you see this huge candle right here, right? What is that? And what time frame am I on? That's the question. So if I know that this weekly fair value gap is going to have a couple of imbalances that I might be able to interact with on a lower time frame. Remember how I said things might even overlap for you. It's not going to be always, but it definitely is a good amount of time you can see structure overlap. I want to use yellow. Okay. So if that's a weekly fair value gap, I have a daily fair value gap. Okay. And so you see what I did there, right? And a lot of people are going to be like, oh, that's easy. I already do that. You're not telling me anything different than I already know. Okay, well, that's perfect. I'm glad you feel that way. Because my goal is to not to confuse you. Again, we're going over stuff that is simple, easier for those who are either just getting into the market or even have some previous experience. This is going to put a lot of your trades into a more consistent, systematic format. Okay? And this is all I want you to do. And a lot of people will sit there and say, oh, well, like, you can't be this accurate, or this model can't work all the time. Okay. But you also miss out on a lot of moves. Okay? I'll say it this way. There's so many ways to view the market, man. And you have to be comfortable with that. Like, the reason why I'm giving you so many ways to view the market in terms of time frame first is because it's going to shape you. You're going to sit there and see, okay, got it. Why didn't price come down to, this fair value gap? Or did this fair value gap get bounced? Or did this fair value gap? You're going to go through so much information, like I said before. You're going to sit there and analyze this whole downtrend, right? Let's say you wanted to look at this and figure out what's going on from, in terms of narrative from left to right. Understandable. And we'll talk more about narrative once we get through this example here. But my point is, right, when you're looking at stuff like this, you're going to start giving yourself like information overload. You're not going to go figure out what to look for, what not to look at. What do you ignore? What do you pay attention to the most? That is where I think a lot of traders have trouble. Because even when a lot of my students will send me back some of their charts, I'll sit there and be like, yo, analyze the last week. Tell me what you saw. And they're marking every fair value gap and its mom in their path. No, you do not have to do that. And what I'm telling you, right, and this is why practice is important. You're not going to be able to do this all day, every day, this quickly, right? It comes with experience. Time within the chart so you can get used to this, ready? Same way I marked that weekly fair value gap, we have this daily fair value gap, right? So if I go inside of this and I break this apart, right? Do you see that, again, where in the weekly fair value gap, if we can get really accurate, this is how we want to do it, okay? Daily time frame, we talked about, is responsible for what? Really good for intraday trading, really good for swing trading. It's kind of like a hybrid, right? So it's kind of right in the middle between a higher and a lower time frame. So it gives me a really good perspective on, order flow. So it's going to let me know that, like, okay, once we get down to this fair value gap on the weekly, I can go down. Okay, I have another one on the daily fair value gap. Where do I really want to participate from? That's my next question. Because again, you can go in, Tarzan style, just wild boy, and just don't really care. Okay, as soon as we get in this weekly fair value gap, I'm going to run it. Okay. I'm not saying that's illogical. I'm just saying there's a method to the madness. All right. You can kind of slow it down. You can go into your time frame and see what's going on, right? We talked about turtle soup. We talked about fair value gap. I don't want to give you any more entry drills until we get you guys comfortable with these. And the reason why I'm showing you a situation like this, and again, we want to run these a few different times so you get comfortable, right? And same thing, time frame selection is the biggest idea here. Dog, what are you doing? Why are you running in and out? Pick a location, dog. Get over here. There you go. Yeah, relax. Sit your ass down. All right. Anyway. Yo, everybody be like, yo, you always go off on tangents, like weird tangents, like. And it's always something like so unrelated to what we're talking about. It's really funny. But the dog is just like, again, walking in and out the door, and it's just like guarding the door for some, like, whatever reason. Like, that's fine with me. Whatever. So again, you see how we're on a 4-hour time frame, right? And again, giving this to you again, so you guys get comfortable with this idea, right? Turn on sessions and then turn on weekend, Saturday, Sunday. It's going to look a little weird on the daily chart up, so I'm really only using it on the 4-hour and down, okay? So look, when that daily fair value gap gets hit, what do we talk about? What do we talk about? Zoning in, figuring out what time frame we need to operate on. So now I can go in and see what session was relevant, right? What happened over the 4-hour. And it's going to be a lot of cluttered data here. So I need to go downward, right? Here we go again, right? Going back, back, back. Okay. And the 1-hour time frame is fire. And it's fire for a lot of reasons. Okay. It's my favorite time frame, and probably when I'm sending out signals for like either that same day or the next day, it gives me a really good vision on what the possibilities are. Do I want to swing trade this? Do I want to possibly just scalp it? I'm going to give myself enough time to look through some of this data, right? And when I get to a lower time frame, I can really break this down. You feel me? And so on an hour chart, I can sit there and make some adjustments. Okay? So what I'm going to do, get rid of this, and you see that this is that whole area that's played into this daily fair value gap. See what I mean? So knowing that it's a daily fair value gap, it's going to take a little bit longer for this move to play out. That's what I'm already anticipating. Okay? So it might not just be this one day, right? So I know that price is going to react. We can run it from there. If you understand where price is at, you might have that weekly coupled with the daily fair value gap, and you run it upwards, no problem. But you still want to stay on the upside, okay? Unless you're scalping this here, I don't want you to worry about that. But that means every single time you get a downwards candle or a downward move that's powerful, you know that's going to be some type of manipulation, okay? I do want to talk a little bit about accumulation, manipulation, and distribution at one point. Those who are OGs with me already understand what's going on, or know ICT, know that's an OG concept. But again, if we're looking for upside reactions, right? And again, you see the result, it's pretty massive to the upside, right? So the thing about that is, again, knowing that you can book the best price in terms of your entry, what you're going to do here, right? Just like this. Got your arrow in. I want to make a little box around that. Is there anything in here that you see that, again, we talked about? I'm going to give you a couple seconds. It might be obvious to you. It might not be obvious to you. And again, I mentioned that this is a bullish structure, so whatever you're looking for on the downside is not the answer. I'm going to give you another couple seconds before I point it out. How do you book the best price when you know price is bullish? How do you know? What's something you're going to look for? It's only 2 entry drills I've taught you so far. It's 9:56. I'm waiting till 9:57 to say it. Oh, come on, J-Man. Give me the answer. You're taking too long. All right. Whatever. So, this is what I wanted you to pay attention to. Some of you might have seen it. Some of you might not have seen it. And it's 9:57. Look at that. Does that stick out to you? It should. I want it to. I want you guys to get so comfortable with the stuff that we're talking about. It just makes almost no sense at how easy this is. Like, I can teach this to, I've taught this to kids. I've sat down with 15-year-olds and 16-year-olds like, yo, can you clearly see that this goes underneath this low here? And again, if we talk about algorithmic price delivery, you need to understand that nothing in this chart is random. Not a single candle is out of place. I want you to think about that. When you see candles make a low, trade up again, it's going to trade back, and we trade underneath that low. Price is now what? Again, bro, I'm giving you gems. You have to, I'm telling you, you have to listen to this one. If there's nothing else that I say that you listen to today, I'm telling you, man, you have to get wind on this one. This is the easiest thing that you could possibly find in the chart. And again, you don't have to participate at this level. You can just identify this and participate right above it or near it or whatever. And I'll show you what I mean in a second. But again, what is this? Turtle soup. Turtle soup, man. Ninja Turtle right there. When I see really good ones, we're going to call that Ninja Turtles from now on. All right? Look at that. Straight Donatello in the chart. Perfect one. And again, if you really need some extra confluence, right? This takes out this low. Yeah. If you really needed some extra confluence. And again, let me hit you with some information really quick, right? I'm telling you, man, we're going to bring all this full circle. You have to be patient. All right? Now, we talked about liquidity, just a smidge, right? Underneath these old lows and above old highs, I mentioned again, above your candles, we talk about buy side liquidity, okay? Underneath your old lows and, liquidity pools and things like that. Not going to get too specific yet on liquidity. I'm just giving you a good small introduction to it. You're going to have sell side liquidity, okay? So when you see me mark certain stuff, SSL is going to be sell side liquidity. BSL is going to be, okay, and I have templates for this stuff. BSL, right? Buy side liquidity, all right? Now, this turtle soup setup, we understood we're already in a daily fair value gap within a weekly fair value gap. Price is what? It was a green fair value gap, right? Price is bullish. And again, even with fair value gap, it's giving me the bias already. A lot of people ask me, yo, you haven't talked about how to get the daily bias or how to get the bias for whenever you're trying to trade. I'm telling you, man, the stuff that we talk about, the concepts build on themselves. Concept of bias to me is kind of like, I don't go in having like a predetermined like, yo, like this is bullish or this is bearish. I'm letting price tell me completely. You feel me? So if this daily imbalance is what got played and we're trading parallel to that, I'm going to feel like we're bullish. It's going to be hard for me to justify a sell position within that. Understanding that all we're doing to come downwards is just rebalance that daily for value gap. So when I want to participate, right, hour time frame, I look for a low to form. Again, I'm giving you easy button mode, right? You're waiting for these lows to form. You're going to wait for them to get violated again at a later time. Not too much later, but at a later time. And from there, you could run it. Imagine if you got right down here at 1732, or even if you got it at 1733 and a stop loss of 1730 or 31. Look at that. Beautiful run, man. And you have not just a whole day's range. You get a perfect, the rest of the week is yours. Pretty much till what? Friday. You could run that from Wednesday to Friday. You literally have the lowest point of the entire week. Is that not significant to you? And again, bro, I point these things out to you in such a chill way. I'm sorry, it's insanely accurate, but I don't have to be on YouTube like a super monotone guy telling you that this is like, hey guys, you're going to fail if you don't have one setup that you need to trade. I'm never going to tell you that. We've only covered 2 so far. There's so many ways to enter the market or look at the chart or perceive something in a way that's going to value your account. Your profit and loss is going to start screaming at you when you start to get too complex with things. I'm not saying you can't go in and be the ultimate student and learn a vast majority about the market. I've done it myself. Not just because I trade every single one of the concepts that I've learned. I just wanted to know what's on people's mind in terms of how the chart moves. How do they perceive the chart? I'm just generally interested. But again, back to our lecture, right? I want you to get comfortable with that. And check this out, right? Let's play the 1 minute. You guys always want to ask me, yo, how do you play the 1 minute? That's crazy that you always around the 1 minute. How the hell does that work? Same thing I told you, right? Watch this, okay? Look how far we had to go back. Jesus, Lord. Crazy amount of data. Like, that's almost like, okay, there we go. Okay, now, I wanted to bring this up. This chart is really, really one of my favorites. It's so easy. Like, it's to the point where, like, bro, I'm not saying if you have trouble with this, that, like, I want you to kind of rewind and go back. Like, always rewind and go back. Like, watch the rest of the videos as many times as you have to. But my thing is, when you're looking at price action, right? I've talked about how time is first, structure is second. Time and price theory is what we're talking about, okay? You can go to any ICT video. We're talking about the same thing he talks about. And it's really, really fun and easy when you start to get wind, because not only does it make price easier to sift through in terms of data, you're going to have so much more fun doing it. If you see this imbalance here, right? And this is from last Thursday, or a previous Thursday, I'll say that. I want you to really understand that, okay, we have a really big imbalance here. Bearish, right? And remember, just how we did the last example, we started on a higher time frame and we went down, right? We're going to do the same thing, but we're going to start from a lower time frame. So for on the hour chart here, we're going to do hour, remember, annotate it for yourself, make it easy. 1 hour fair value gap, it's time frame specific, right? So we're going to label it like that. And the only thing, that's the only reason why I have this here, is just because of that imbalance, right? Yes, I understand it's drawn incorrectly. Shut the fuck up. Whatever. Okay, here we go. But you see, we jammed down too fast. Buyers weren't able to participate in this area, so it jams down. We need to rebalance this before it makes any significant run lower. That's just how it's going to work. Price is always going to do it in significant situations, all right? As this is coming to rebalance, I'm already anticipating this move downward, but I want to be accurate. I want to know when I can participate at almost the highest price point, knowing this is going to come up and make a nice little, structure here before it falls. No problem. And again, anywhere in this fair value gap is totally fine. But again, if you really want to go for accuracy, if you're a nerd like I am, we are going to jump in this fucking gap. Ready? Watch. 30-minute time frame. Just go down. Just get comfortable. Just go down. Okay? So now we're going to keep this here. We're going to take this off so it's not distracting us, right? Okay? Now, somewhere in this area, what can we grab onto? What's clean about this? I'm going to give you like 10 seconds to think about it. Awkward, right? Yes. Awkward is because there's not too much in this area. I mean, like, realistically, like, I don't want to give you another concept yet in terms of entry, but there is a entry on this time frame, but it's not the one that we want. So what we're going to do is we're going to go down a time frame. Okay. Now, is there anything in here that we can still use? Again, if not, that's totally okay. Now, I want you to get used to thinking that way. Do not force it upon yourself. Oh, the 15 has to have a certain structure for me to participate. Why? In general, to participate? It might be what you're most comfortable with, but you don't need the 15. You don't need the hour to make a fair value gap. You don't need the 15 to make a fair value gap. Is that the one you're most comfortable with? Sure. If that makes you more comfortable, you can wait for the 15. However, if you really want to get in there, I'm telling you, sometimes you have to go where? You really got to get in there, bro. You got to get in there. It's going to be to a certain point where you're like, yo, I'm trying to find something, man. Seriously. Now, what did I talk about? If you're not going to use a fair value gap, you're going to use a turtle soup setup. There you go. We went all the way from the hour and we ended up on the what? The 5 minute. Before we were able to find what? What we were looking for. So now that I got that, I can get rid of that. Now I'm on a 5 minute time frame, right? This is how people ask me, like, yo, like, this is crazy. How did you know it was going to go down directly from here? Bro, it just went directly where you said it was. Yeah. Is it rocket science? Absolutely not. All I did was scale in. I told you, price is fractal. So for you to see a weekly turtle soup, a daily turtle soup setup, an hour turtle soup setup, go down to your 5 minute. Look at this. Does price do what you want it to do? It runs up, makes a what? Old high. It's going to do what? It's going to come here, trend down. It's going to run a little bit. And as soon as it starts to trend upward, you're going to pay attention to that. That's when you should be thinking about what your plan is. What lot size you're going to be using, where your targets are at. And you just want to start to think to yourself, when price gets above this old high here, I should be looking to sell this thing. Do not be a buyer above that. Do not. Do not. And I want to explain why again in a second. Do not be a buyer above this shit. Do not. Look what happens the moment you would buy. Price rains down on you all the way to the motherfucking target. Oh my God. Look at that. Beautiful run. Beautiful run. But this is what I mean. Off the 5-minute chart. You don't have to be a rocket scientist and try to figure out every time you get on to make a trade, oh, I got to go to the monthly. I got to go to the weekly. Then I go to... No. You can start on a lower time frame, adjust your parameters, and move accordingly. Do you feel what I'm saying? The last time we looked at the trade, we were on the weekly, refined it to the hour, and we participated there. This time, we are started on the hour, went down to the 5-minute, we will participate here. As soon as this ran above, sell this thing. If it runs back above that, sell it again. With confidence. With confidence. I'm going to say that 2 times. Jay, man, wow, you just taught me some incredible shit. I'm so eager to get in the market and try it. What's the first thing I should do? First thing is to go right back and watch part 1 through part 3. Part 4 talks more about personality and finding yourself as a day trader or a swing trader or a scalper. I really want you to catch wind of what this can do for you. Not just in terms of great reward, but your mental as you're operating in the chart. I want you to get comfortable. The same thing that you're going to look at or look for on a weekly chart. Man, I am hungry as shit. Whoa. That's crazy. Damn, I really want like, oh, fuck, should we get like cheesesteaks or something? Yo, you know what? Maybe I do have ADHD or something, bro. Cause like, what the fuck was that? That literally came out of nowhere. Yo, I am so hungry. I got the munchies right now. Like that last blunt just really got me. Like, I'm sitting here and I'm like, okay, nah, we'll get food in a second. Like, oh man, that was nuts. That was nuts. Anyway, but this turtle soup setup, you can't tell me this is not complete gas. And again, a lot of you guys like gold and you want to figure out how to trade it and whatever else, right? And so again, you don't have to be forcing yourself to participate from a certain time frame. And again, it's all about being able to shoot from different parts of the court. That's why I say it's kind of like basketball. But when you're trying to get in, you can't be afraid of taking a shot, number one. And again, if this goes too high for you, stop yourself out, wait, let it go high again. Maybe it's going to take out this high over here, which is completely also understandable. If it doesn't do that, but I would also take this one already. I'm totally fine with this high being taken. I would sell it here. When you come down, if price actually gives you a lower high, I'm not going to get into the whole lecture here about that, but this is really significant, and this is definitely telling you you're on the right path. This is starting to be really not just evidence of your bias, but it's going to be pretty a good indication that this is going to be really sharply declining soon. Price is having trouble getting back above another high. A light bulb should have went off in your head just now. Price is having trouble getting back up above here. And it's going to run down and aim for sell side liquidity. Okay. What I want you guys to understand, right? And, you know, this is going to be like, pretty much when you're looking at this, like, bro, I lose price. You ever do that before? Like, you just get on the 1 minute and just completely lose the candles. Like, I have no idea what they are. Like, yo. Like, man, how annoying is that? Like, sheesh. Right? There we go. Whew, had to find him real quick. Anyway, my thing is here, when you're operating the 1 minute, man, you could do the same thing. Okay? I keep hitting that button, y'all. My bad. My bad. But check this out, right? Now, when you're on the 1 minute, I talked a lot about, you know, what are, when I say significant lows and significant highs, what's significant? Like, what would count as, like, significant? That's the question, right? And you can go into your charts and backtest everything I say. I don't care if you believe me. I don't care if you do. but it's going to be on you. You're going to have more trouble trying to prove me wrong here. I'm telling you. My thing is, when you're on whatever chart, right? Now, remember, my black spaces in between are going to be Asian session, right? My bad. I don't want to offend nobody. I just say it that way. Is what it is. Asian session. What? I'm sorry. I'm sorry. Anyway, so notice how price has this straight, crazy 1 minute move, right? Asian session starts, right? Okay. And what did I tell you about old highs or really significant highs, right? When this session first started, right? And again, although we're on a 1 minute chart, what I mean by significant does not mean higher time frame. The higher time frame can be more significant, but what I'm saying to you is when you get something like this, a good super nice run right here, this is the first place it stopped at where it made a pivot point. It came down a little bit, came up, made a lower high, right? So if you're watching this when you're 1 minute, and it's totally logical to do this. When you're looking at it, right, it pops into this imbalance here, runs up, goes down, consolidates. It runs up again and does what? Takes out this high. Okay? And again, on the 1 minute, it's going to be a lot more noise because, again, these are very quick candles forming, right? But you're going to understand price is doing the same thing that you saw on the hour. I don't want you to get scared of it. I don't want you to use the information that you're looking at. And look, just as soon as we scroll over just a little bit, right? If I extend this, what does price do? Makes a, what do we talk about? Makes a high, right? Price is going to trade underneath it, right? It's going to take out some form of an old low, right? If you were scalping, again, all of you wonder why I can scalp this thing a million times back and forth. This is what I'm doing. Again, I teach all of my students this, bro. My bad. Stop yelling at me. I'm sorry. It's going to trend down, trade up above a old high. Let's zoom out. It's going to trade up again, trade lower. It trades up again. What did I tell you? You can sell it once it gets above this high here. You can instantly have a sell position. You're going to be in profit almost in 2 minutes, 3 minutes. You'll be in profits, okay? It's going to run up again. Don't get scared, right? You're going to participate again. As long as it's not breaking this one. Although if it did break this high, I would actually probably stay in, probably get another position, but that's just me. You don't have to do the same thing. But again, I'm going to participate again. You're going to start to see price respect this, right? And again, this is your first session high, so this is really significant for me. It's going to run up, and price is eventually going to die. And perfectly perfect, right? And again, also, if you paid attention to what we talked about, right? You know damn well that this price jammed up way too quickly, right? And again, this needs to be rebalanced. So, ooh, that just took a light bulb into your head again, right? Not only can you participate when price comes to a rebalance of fair value gap and then goes to run again, how you want to normally do it, if you're comfortable and you know that price is going to target an imbalance on the rebalance and you go to a lower time frame, you can play this downward from the turtle soup, target this imbalance to take your profit. As soon as price starts to reverse on you, get out. Simple as that. Simple as that. And then look, as soon as price starts to take out some old lows, right? Price is now what? Bullish. Does it run significantly off your 1 minute chart? It's a little choppy along the way, don't get me wrong, because it's the start of London. But it runs here, and then it runs up. You feel me? Just so you can see it, it really does it like this. It's not clean. It's not a move that you would try to, cleanly try to make, but Like, again, if you want to do a significant run here, you can do the same thing. Price makes a significant high. There's actually again, without leaving the 1 minute chart. I'm telling you, bro, I run it just like this. Look at that. What is that? If I blow it up, it looks no different from an hour chart. It's just a 1 minute candle. Comes down, fair value gap. It's going to run underneath, right? You're going to get rid of that. And you're going to notice that price left a small gap here. You have the post candle, candle after it. You have the space in between that price is not going to ignore. It's going to come down. It's going to run back into this area, consolidate. You make sure you participate within an imbalance if you're not going to use a turtle soup setup, and you're going to run it. And again, where are you going to take your profits at? If you're scalping, right here. Simple, man. Simple. Is that the only target you're going to anticipate? Of course not. Come on now. Y'all know me better than that. Exactly. Target 2. I'm telling you, bro, this is systematically how I trade, man. Are you going to let that scare you out of your position? No. Because look what happens. Price dies. Still. And you have not left the 1 minute chart. And then when you're looking at this, what did I say about order flow? If order flow is bearish, it's going to start respecting bearish order flow. Or it's going to start respecting bearish PD arrays. So you have this bearish fair value gap. It's going to run liquidity. It's going to run up a little bit. It's going to run another small high right here. It's going to die. Price jams down too quickly. You have another imbalance. It's going to rebalance this one. So you have another 1 minute fair value gap. That gets respected, right? And again, even if you extended that, you see what I mean? Yep, price just runs into that imbalance. So any upward candles, you can't sit there and be like, yo, price is going to go to the moon. It's not. Order flow is literally bearish. So when I say that, that's similar to like a retail trader saying, hey, this is a bearish trend, or the trend line is bearish, or whatever the case is, right? Notice we don't use no support and resistance concept here. I don't care about it. I'm not using no indicator. I don't care about that. What's more important is that we know that price is algorithmic and it's going to do the same things. Whether you're on a 1 minute time frame or 10 minute or 15 minute, 3 minute, it doesn't matter what custom time frame you even want to look at. It's going to do the same thing. It's going to respect this order flow. And like I said, look at that. Fair value gaps and whatever else that you can find is still going to be respected. Again, can you participate from these areas? You sure can if you have, like, you know, targets that you can still target. You don't want to be right next to a target and still use the very, very last fair value gap to run it. I mean, you can, but why would you? I mean, I'm showing you how to get the highest price points for sells, how to get the lowest price point for buys, right? I want to talk to you about something really quickly. I want to leave you with an idea, okay? And I want to just jump off gold. Let's look at something else just to get you off your, you know, comfort level within one asset, right? Okay. I want to bring your attention to an idea, not euro. Let's look at US 30. Let's look at US 30, right? Okay. Now, US 30, right? Look at that. It went right where I thought it was going to go. Right to my target, right? Damn. That thing smacked right to the target. Anyway. What's more important here? Okay. Now, I talked a lot about the daily chart. Okay. Smart money operates mainly from daily charts. Okay. In terms of liquidity, the daily chart is really, really abundant. So it's really, really easy to target previous day's lows or highs, okay? Especially when you're looking at turtle soup setups or using them as targets, the daily, or finding where the previous day's high and low is. Very, very useful information for how you're trying to operate intraday or within that week, or even if you're scalping, okay? It's going to be really helpful for you to know, all right? A lot of people really get scared of the indices like NASDAQ, US 30, whatever. You don't have to be scared of any asset because all the stuff I'm teaching you is hybrid. It's going to be seen on every chart you've ever looked at. That's why I love this so much, man. All right? We covered a lot tonight, and it does feel good because it's a clear perspective and a clear understanding of what we're doing. I gave you the weekly to the hour, and I gave you the hour to the 5 minute. And I showed you how even if you're operating on a 1 minute chart, that the concepts we use do not change. I've only given you 2 entry techniques so far. Man, I am so hungry. We're going to wrap this up with one more idea so I can go get some fucking food. Oh my God. This is crazy right now. Man, if you smoke as much weed as I do, it just be like that. You just be like, damn, yo, like I need food ASAP. So I need to make sure that, man, yeah, I need cheesesteaks. And we're definitely going to roll a whole nother blunt right after this because that is crucial. What time is it? Okay. All right. Now, last idea, right? Okay. This is a big thing here. All right. We talked about turtle soup, and honestly, and I'm going to keep talking about it. You know why? Because it's my favorite setup. It's my favorite setup. It's so easy. It's unreal. It's unreal. We like easy, right? I'm not saying that it's going to make everything in your trading magically the key. But I'm saying when you get used to seeing this a certain way, you can't help but to run these certain ideas. And again, why did I say what we talked about before, right? And I want to be clear with this. Above old highs, right? You want to be a seller. Under old lows, buy. I'm putting that on the screen, okay? I need this on the screen. I need it, I need it, I need it there. Man, listen. That's how crazy I need you guys to understand this. What's happening in this area, right? When you have retail traders trying to participate, you have buy stops above here, okay? And again, if you're familiar with limit orders in general, a buy stop that means when price, makes a high right here, retail traders are going to sit there and want the breakout trades. They are breakout artists. And I love that term that ICT used. He said breakout artists. That always stuck with me. But the big thing is, people that are trading retail breakout strategies, right? Or bro, I don't even know how to say this shit correctly. I don't know. I trade the way that we trade, and I just don't subscribe to another idea like that, to where I don't know what you technically call it. I guess it's a breakout strategy or a breakout technique or whatever, right? When you're trading breakouts in general, buy stops are going to be triggered here automatically because retail places them right above this high. Okay, right here. When this green candle comes up like this, it's going to trigger all the buy stops in the market into market orders. So now these are in the market, floating around, open positions, right? Retail is in profit for a little bit. These will actually get paired with smart money short positions. Whose side do you really want to be on? We haven't talked much about the market efficiency paradigm, but my main point of what I'm telling you is, if you know that smart money is literally pairing short orders with these buy stops that get triggered into market when it runs up like this above old highs, You want to be a seller. There is so much more selling going on, and it's going to be with institutional sponsorship. Anybody with a huge account is going to be building positions in this area. Why do you think you have this massive reaction right here? Above old highs. Consistently, it does that. Same thing when I'm participating in a buy situation. What's happening when old lows are later violated? It's triggering sell stops. This is the main thing ICT will literally get in your ass about. He will literally be on your ass about this. And because, again, this is why I'm telling you, even if I didn't explain fully why before, the dog is tripping. Again, above old highs, you want to be a seller. Under old lows, you want to be a buyer. So when these get triggered into the market as a market order, those sell stops, those are... Dog, shut the up. Shut up. Dog be tripping. Anyway, so when you see these old lows violated, right? Those are going to trigger longs from smart money. When those positions are finally in the market, they're going to cause a crazy bullish reaction. And I want you to be able to participate in those.